How's it going, fellow traders? It's Magic Trader here, and this is the Forex Market Outlook for November 21st, 2018. So, some good movements taking place in the market, and I wanted to come in and do a Forex Market Outlook video today because I wanted to show you a few things on some of the charts in regards to signals being produced and what it is that we're waiting for in order to have a valid trade signal. I also had one of the members contact me regarding a potential trade on the Aussie US dollar, and he took a trade based off of a 4-hour demand zone nested within a daily demand zone. And he asked me about it, and I gave him my comments. And I'd like to speak on this a little bit more when we get to that. But right now, let's start off by taking a look at gold. And so we know that price rallied up into this weekly area of supply. It has since dropped into this weak area of demand, and now we're seeing a push to the upside. All right. Now, do we want to take longs right now? Yes, we could say that taking longs down in this area would have been a decent probability. As you can see, it is working out. But we don't know for sure until this weekly area of supply is taken out that price wants to make that move to the upside. We know by some certainty by looking at the CFTC data and all the information that I've supplied in the Arujo report. We can clearly see that there's a strong argument to be had for a bigger push to the upside, but we don't know for certain that this push to the upside is going to take place until at least this weekly area of supply is taken out. Because until that happens, we are in a range between two areas of demand and supply, between two zones, okay? If this is taken out, a bigger move to the downside. If this is taken out, a bigger move to the upside. It's just, that's how it is. Now, if you want to start taking trades based off of the other information and evidence that we have off of areas like this, you can, and you can see that it's working out so far. But it can come back down, it can go lower, it can do this before it makes a bigger move. So that's what makes these type of trades tricky. Once this is taken out, we'll have a, let's say here on the daily chart, okay? Here's this weekly area of supply right here, okay? Now, if price comes up here, consolidates, and then blows up to the upside, there'll be a nice area of demand here. All right, and this will be a decent area to plan a trade long. Why? Because we have an exact area where we can place our entry, our stop loss, so we know exactly what our risk is. We know exactly that this is the zone that should work, and if not, then price will drop lower. But high degree chance that it's going to work because it'll be the zone responsible for removing this opposing zone here. Okay, so this is where the odds are, waiting for a move like that as opposed to just buying down here, because then you don't know where to base your risk off of. You want to base your risk off of the weekly zone? That's great. But look how much risk you'll have to take, right? To the reward. If we wait for a move like this and we take a trade off of a zone like this, entry here, stop loss here, look how much risk versus reward you'll get. A lot greater than this type of situation, all right? So, and will be higher odds. So you take smaller risk to reach a bigger reward with lower odds, okay, or lower odds of the trade not working out, or I should say higher odds of it working out. So this is what I am waiting to see here on gold. All right. Now we take a look at oil, and we see that oil is now responding to the tested monthly area of demand with the ascending trend line on the monthly chart. And we're seeing that demand coming in right now. So this is retail and institutional buying, okay? Because we are within a weekly area of demand. It was once tested here. Now we got a deeper penetration, picking into that demand, and now we're seeing the reaction. What I'd like is to see a very big reaction and a move to the upside here. This is where I believe is the strongest opportunity to get in short, okay? Because when price responded to this descending higher time frame trend line, the force of price was to the downside. And nothing will stop it until a significant force to the upside comes into contact. And that just happened to be this ascending trend line right here. Okay, now it was possible for a reversal to happen just after breaking these lows. We could have seen something like that. Anything was possible, because sometimes when the steam runs out, excuse me, sometimes when the steam runs out, what tends to happen is we get a reversal into the area that is the latest area that has become valid, and then we get the bigger drop to the downside. But in this case, it was just a free fall until an opposing force came in to push price up. So now that we've hit this monthly ascending trend line, there's a very good chance we see a push begin to form. Now, does that mean I want to go long here? No, it doesn't. Why? Because this could break and we can see a big drop like this. Anything is possible. The odds are not that price is going to move up from here. The odds are, if price does move up, high odds of it dropping from here. Okay? That's what you got to always remember. Just because I'm saying there's a good chance price goes up here, I would not put my money on going long here, because it may work or it may not work, and the odds of that are not favorable to me if I play these scenarios over and over and over and over and over again. I want to be in this game for a long time. So I only want to trade scenarios that are very high odds. Shorting from here is high odds. Going long from here is not high odds. All right. So now let's move on to crude, and we can see that on crude it penetrated that monthly trend line just a bit, but now we're starting to see that reaction like we're seeing on the other oil contract. And what is it responding to? This area down here. Yeah, pretty much this area down here. Let's take a look at something here. This here. Nope, I don't see. Let's take a look here if there's any zones here that I missed. Drop base, okay, that's a trend line here. Take that area. Nope, I didn't miss any. Okay, looks good. Now we're getting a really big strong push to the upside, and if this continues up really strongly, yeah, then that means this supply zone will become invalid because there will be no consolidation away, and therefore we'll go up to the next area, which is already the zone drawn over here. Okay, so let's just extend this trend line here. Price is overextended. Price comes up, invalidates this. This is the next zone. All you need is this to be taken out. And once it comes up to here, this is the daily area of supply nested within this weekly area of supply. Short trade signal is right here to go short. That's where I'm looking to go short. Okay? So just hoping that we get that move to the upside, because I can't control the markets. It's what the institutions want to do, right? Not me. So let's take a look at something. Let's go and take a look at something here. Let's look back at oil and see what the analysis was. So big increase in shorts right here, and very aggressive with total positions. Not as aggressive as here, but they have been taking profits. 800 now to 561, starting to increase shorts. So there's a very good likelihood that we get that big rally up here. I don't think they want to start adding more of their shorts right here at this ascending monthly trend line. Okay, I think they want to add shorts higher, like around here. So because longs are still very aggressive, they could still be closing out longs, getting price up here and then adding more of those shorts. So by looking at the data, we can see that there's a good chance, okay, a good chance that we get that move to the upside. So that allows me to stay confident and patient and wait for something like that to take place. Okay? Now let's go to the dollar. So on the dollar, we had price drop into a daily area of demand right here. That was responsible for removing this area here. That was responsible for removing a weekly zone. This was important, so this zone is important. So a tested weekly area of demand here. Price stalling. We could see this get taken out and then a drop. That's what I would like to see. Okay, if this daily area of demand gets taken out, likely we're going to see that drop because this is already tested on the weekly. So any type of drop will take it even deeper. And depending on where price is aligned with this trend line, if it's starting to penetrate deep on the other side of that trend line, where we can expect a bigger move like that. Okay, or it can just hold this area. It's possible too. Very possible. All right, because we know by looking at the data, once again, let's take a look here. We know by looking at the data that there's no bias leading us to believe that a drop is going to take place, right? In fact, longs are the bias. All right, 86%. But based on these numbers, we know that typically at these high numbers, we see sell-offs. And so far we haven't seen that. So that's what leads me to believe, plus the added technicals, if we have this out, for a bigger move like this to be possible. Okay? But again, if you wanted to buy, if you wanted to take a position and go on vacation for a month and come back and make money, or 2 months or 3 months, it'd be buying the dollar. There's no doubt in my mind that is what I would do. Okay, so now let's take a look at the Aussie, because I wanted to point out something. It's important for you to see something here as to what the member was asking me and why price did what it did. Okay, so first, when we take a look at, let me just do something here. Okay, so now the daily chart, you can see it a little bit larger. So I had a demand zone here, right here. Okay, and what I was saying is I posted in where did I post it? Well, let me bring up the image. Okay, here's the image that I posted. Okay, watching for a long signal off of this area right here. Okay, so now I never said that there was a trade signal here. All right, and there was one member that said, is the trade signal still valid since this 4-hour area of demand got taken out? And I said, there hasn't been a trade signal yet. I said, I'm watching for a long signal off of this area. Okay, I'm waiting for it to be produced. If it is produced, I will say, this is a trade signal. Here's the entry. Here's the stop loss. Here's the targets. If I don't say that, then it's not a trade signal. Okay, that's really key to remember. So so I was watching for a signal, and here's the reason being. Okay, let me explain something to you. So we have price breaking to the upside. Okay, when we take a look at the monthly, we can see that there's a very good likelihood that this area gets taken out, and a move like this is what takes place. Okay, so you have to remember, a weekly area of supply is in control right now. Even though the descending trend line is broken, a weekly area of supply is in control. And it is weak because it's already tested. So what do we know when a supply zone is in control and there isn't a trend? We know that it is a moderate force, okay, to the downside. Okay, weekly. Now it's already been tested here. This is the second test, so it's a weekly moderate force to the downside. Okay, so it's still a force to the downside. It's a weekly force to the downside. There is no trend to the upside, but we know that it's a very weak, or it's a weak weekly monthly force. All right, now if it was a weekly monthly force to the downside, what we'd be waiting for is a weekly force to the upside. Okay, because it's pushing down. We need something of the same power to push price up, because we don't have a trend to help push price up. So we need an opposing force of the same power to be able to push price up. But because it's already been tested, it makes this a little bit weaker. So therefore, the wind blowing at us is not as strong as it would have been if it had not been previously tested. So therefore, we can look for a lower time frame, one time frame lower force to combat it, which is a daily force, okay? But does that mean I want to just take a trade here and put a stop loss here? I could do that. I could do that if I'd be willing to take the risk, but I'm not willing to take the risk with my money here, okay? Once you get to know, see, this is a nice 2-to-1 move away. Once you get to know how these forces work very well, you may be willing to take on the extra risk that I am not, and you can take a trade with a stop, with an entry here and a stop loss here, and right now it's working fine. But I'm not willing to do that. Okay, so understand this concept of why the daily force would be the minimum that you would need to hold the force being pushed down by this weekly supply zone pushing down. Okay, so was I saying monthly? This should have been weekly. A weekly. Oh, moderate force. Yeah, that's right, moderate force. Okay, so this will be the minimum required. Now, if you go down one more, okay, so there was a demand zone here, but this is a 4-hour force. Taking a trade off of just this, even though this is nested within this, you're making the assumption that that weak moderate force to the downside is so weak that a measly 4-hour force is going to be enough to push price up. That is extremely risky, okay? And once you get to know how these forces work, you're going to realize that this is not something that you should be relying on. If anything, this force, the daily, but not a 4-hour force, okay? When I was pointing to this area, I'm pointing to the daily area of demand. When I said I'm watching for a signal, I want you to think through this, okay? What signal would I be watching for to ensure that this daily area of demand is going to hold, okay? Think about it. This area here was created because it removed this 4-hour zone here. Now, if the daily area of demand was going to be taken out, then the institutions would be using this area of supply to continue price downwards to break through the daily area of demand. Okay? If this area that was responsible for removing this area gets taken out, then that means the institutions have plans to hold this daily area of demand because they are filling demand here and filling enough demand that it will take out their own supply zones. Okay? So now, if this 4-hour area of supply that was responsible for removing this area of demand gets taken out and price just rallies up like this, then we'll have an area of demand that will be responsible for removing this. And this is where I'd take a trade off of a 4-hour zone. Why? Because weak moderate force to the downside, okay, pushing down, and then a daily force pushing up is coming against it. Who will win the battle? Well, an early indication of who's winning the battle is to see where the momentum is shifting on a lower time frame. If this gets taken out, momentum shifting up. If this gets taken out like this, then momentum is shifting down. So right now we got two doorways, a 4-hour supply and a 4-hour demand. Okay? Or sorry, the daily demand zone. Okay? Two doorways. And now we got to wait and see which doorway is going to open. So let's take a look at why I've drawn this zone like this. Okay? Because if you know the rules, you'll know that the 50% candle, you have to incorporate the next 50% candle, right? So when I took a look at this, I said to myself, automatically I looked at it and I said, no, this is the way to draw it, not including this. Because I could just tell by looking at it. I've done this so many times that I just know that this is not part of it. Okay, because look at the size of these 50% candles. Okay. Okay. This one is an exception. This one is an exception. But look at the size of the 50%. These are normal 50% candles. You see them everywhere. Normal 50. And then all of a sudden you have this huge candle here. It sticks out. And when you drop down one time frame, what do you see? Okay? You see the drop happening from here. Right? Price rallied, stopped, big drop, rallied, created supply, and then dropped. So that is the area that I want to focus my attention on. So that's what I'm looking for. If this gets taken out, momentum is shifting to the upside, affirming that this daily force, the opposing force against the downward force from the weekly supply, is holding. Therefore, price is more likely to move up and continue on its journey. It's still a risky trade, but a lot less risky trade than just taking a trade here, stop loss here. Okay? Because overall we see momentum shifting, we see the institutions taking profits on their longs, or sorry, on their shorts. Okay, we look at shorts, they're taking profits. 81%, still very aggressive, and we know by looking at previous data that they are more likely than not going to continue taking profits, and price is going to continue up. Okay, we see the same thing with the Kiwi, with the dollar, with the Kiwi, the dollar Swiss, dollar yen. Okay, we're seeing the same theme. So we're kind of counting on this theme to play out. We're kind of counting on the odds of this being taken out, leading to a bigger move to play out. We're counting on market dynamics to prove correct, as this being the zone that price is going to start moving up from, with the expectation of that weekly area of supply being taken out. So we're counting on a lot of things. It's not the highest type of trade, but it is going to be a trade signal, at least for me. Okay? So now we take a look at the other Aussie pairs to see if there's any other indication that we can expect a bigger move to the upside. As for Aussie Cad, we see that price is now testing that area of monthly supply that I've been mentioning that was responsible for removing this area here. Okay, we got that big rally up as I've been expecting. So in terms of Aussie Cad, weakness on the Aussie is what is to be expected. So now we have to say to ourselves, is this weakness on the Aussie or is it strength on the CAD? So let's go over to the US CAD. Strength here, well, right now we're seeing weakness in the Canadian dollar. But if that US dollar starts to collapse, and we are in supply, okay, we are still at monthly supply, okay, resistance, whatever you want to call it, underside of the trend line, lots of signs showing that this can happen. And if that is what starts to play out, then we can expect that is going to be the leading cause of a drop on the Aussie CAD based off of the test of the monthly area supply. So this doesn't signify to me personally that the Aussie is going to get weaker. It tells me that there is a potential for it to get weaker, but more likely than not the CAD to get stronger, which will help facilitate that. Okay, and then we now go over to the Aussie Yen. Let me take a sip of my water. My throat's getting a little dry. Okay, so for the Aussie Yen, we see that weekly trend line breaking. Price came down and it tested the daily area of demand that was responsible for removing that weekly trend line. And we're seeing nothing but upside. This is already tested, so this can break. This here is fresh, but it's nested in a bunch of garbage here. So this can happen. Does that signify a strong Aussie? It sure does. Okay, it's either a strong Aussie or a weak yen. Does the yen look like it's going to get weak? Well, it looks like this is holding. It can continue to the upside, so yes, it could continue getting weak. and it can actually start doing this with US dollar weakness, right? But when you look at the US dollar, there's a very good argument to suggest that it has a good chance of holding its structure and not really collapsing to the downside. So we have to take that into consideration with this too. So if that doesn't happen, then that means the Aussie holds value, or the yen holds value, but the Aussie gets stronger. Okay? So that kind of supports a strong Aussie. Now we go to the Aussie Kiwi. Both are getting strong, so we're seeing a lot of nothing. If the Aussie was to get weak and the Kiwi strong, then we would expect a bigger drop. And does that look like it's going to take place here? Well, we're down at these lows. It can happen. At the end of the day, a 3-month area of demand is in control, so more likely than not, we're going to see it hold or even more upside. So looking at the Aussie pairs, we see that there's a very good argument for Aussie strength. Okay, so this is the process I go through to fully understand what my risks are involved when taking a trade signal. Okay, there's trade signals all the time, but whether they are high probability or low probability, that is my job to determine. And I don't want to take every single trade signal. I only want to take the ones that have a high probability of trading or of working out. Because at the end of the day, I'd rather not make money than lose money. All right? I'm looking to make money, but I'd rather not make money than lose money. Okay? So, Cad Yen. So we have the monthly area of supply and control, which pushed price down. We had the nested weekly area of supply here, which we see now is pushing price downwards. Okay, and now we can take what we're seeing here on this chart and try to decipher if the Canadian dollar is going to be getting stronger or weaker based on the technicals. Now we know that both are expected to get weaker, and that's why we're getting a lot of this ranging motion here. So for this specific instance, to try to figure out if the Aussie CAD, remember when we were looking at this, we were wondering if the Aussie is going to get weaker or if the CAD is going to get stronger. Let's look at here. Is there any indication that the Canadian dollar is going to get stronger? Not really. In fact, we have supply and control, so it looks like, if anything, the Canadian dollar is going to get weaker. Okay? Because at the end of the day, we'd need to see a drop like this, of this getting stronger, and it looks like it's very well supported, and that just may not happen. Okay, so if we go back to the Canadian, the Cad Yen, it looks like the CAD is going to get stronger. So if we look at the Aussie CAD, if the CAD is going to get stronger, it doesn't mean that Aussie is going to get weaker, but the Canadian dollar is going to get stronger, right? So you see how you can start putting the pieces of the puzzle together like that? This is just a good way, an indication for you to see what you could possibly be doing to put the pieces of the puzzle together to figure out which currencies are likely to get stronger, which ones are likely to get weaker. And once you analyze all these cross pairs and look at the technicals and examine and cross-reference them to determine which is most likely going to move in what direction, that's going to increase your odds of getting really good trade signals. Okay? Now let's look at the euro and see what's taking place here. So on the euro, we have a daily area of supply and control here, descending trend line, supporting that move to the downside. All right? So price reacted to the downside, but it also removed this area of supply, causing this demand, causing this supply, and we have an ascending trend structure holding price up. So right now, we have weekly area of demand pushing upwards. We have the weekly area of supply here. So we're in between two worlds, and we have this area here falling short of being nested within the weekly area. So what's going to take place here? Okay, anything can really take place, because once again, let's take a look at what we have for the euro. Excuse me. So let's look at the report and go to the euro, US dollar, right here. Okay, so what we know is that they are heavily short and they've been increasing their shorts. So eventually price is going to drop. This is what we're seeing. Okay, they were heavily long down to neutral territory, and the expectation, and we can see an early indication here, is that they're going to be going short. Like, we've known that for quite some time. We're expecting that. All right, so if you wanted to take a trade and go on vacation for a few months, it'd be shorting the euro. All right, so we have this descending structure. If price is going to retrace up along with the Aussie, the Kiwi, and the profit-taking theme that we've been seeing taking place within the markets, this area would have to be taken out first, this daily area of supply. So I'm watching for signs on the 4-hour to see that momentum shifting to the upside and preparing to take out this opposing zone. So we need this to be taken out, new areas of demand, and then we can get a bigger move. Okay, so I'm watching that for this similar scenario like this to play out, to determine whether or not this momentum is actually going to shift and continue shifting in the weeks to come. So we look at the Euro Aussie, and we have an imbalance, a big imbalance in control, which is pushing down on price. We have this ascending structure holding up on the monthly chart, and we have this weekly area of supply here. Momentum shift. Okay, I wouldn't mind taking shorts off of this area up here, but it'd have to be, you know, new daily areas of supply being formed. Okay, because it's not enough to just short here. Okay, because we have a trend to the upside. This trend line is being contacted, and this 20 EMA on the monthly is being contacted. We could see an accumulation and then a bigger move to the upside take place. We know that over time euro is going to be getting weaker, so it gives us a higher odds that taking a short off this weekly is going to take place. But for me to get in with better odds, I'd be waiting for a momentum shift to take place on the daily before taking a short. So that's what I'm watching for on the Euro Aussie. On the Euro CAD, we have a trend to the upside on the monthly, downtrend that looks like it's being penetrated. So we could wait for a drop down like this before a long. That's a possibility because we are uptrending. The only thing is, this is on a downtrend. What would be nice is to see a big break, a demand zone here, and then taking longs of that demand zone. Okay, that would be a better option. But that is assuming the euro over time is going to be strong and the CAD is going to be weak. We know the CAD is going to be weak eventually, right? If you look at the US CAD, we know eventually it's going to go up, but it may take some time for that to play out. So we have to be very careful with trading this Euro CAD. As you can see, Euro Aussie would be a better bet, because at the end of the day, like I've said, we know with a good amount of certainty that the euro is going to get weaker. So shorting euro pairs would be the higher odds scenarios, especially against other pairs that we feel are going to be getting weaker as opposed to stronger. Right now, the Aussie is not a good example of that, and the Kiwi is not a good example of that. Okay, we know that both of those are expected to get stronger. Okay, we have expectations for those to get stronger. So we go to the euro pound. I haven't liked this chart for a long time simply because of what it's doing on the monthly, and look at this. You know, it's just not good. It's not good, so I don't even want to bother looking at it. Euro yen, the trend is up on the monthly chart, which is great, but doing a bunch of nothing like this. We got new weekly area of supply formed here, and again, very, very difficult chart to trade because it's not doing much. If we expect the euro to get weaker over time, we're also expecting the yen to get weaker over time, so that's going to cause a lot of nothing, a lot of range bound motion. So until something is very definite on either the euro chart or the yen chart, I don't want to trade this pair. Now again, we're going to the euro Kiwi. We know eventually that the euro is going to fall, and we know eventually the Kiwi is going to fall. Okay, but short term, you can see the structure here to the downside is very intact. Okay, you look at the Kiwi, and the structure here is broken to the downside. We're getting momentum shifting. So if anything, a weaker euro and a stronger Kiwi is what we should be expecting. And we have this monthly area of supply and control, and we're seeing the drop from it. And we see momentum shift taking place on the weekly, and we have weekly supply up here. So if price was to get up here, this is where I'd like to get in short. Okay? Because again, that likeliness, just by looking at the technicals of what is going to play out, would be a weaker euro as opposed to a Kiwi. And then again, we can go back to our the Araujo report and take a look at the Kiwi. What was written up about the Kiwi? So we see that shorts are aggressive, but they've been profit taking massively. So we can see that they're profit taking on shorts, causing price to move up. All right. Still short, but they're profit taking. Now we're not seeing a very definite picture being played out on the euro. Okay, again, let's take a look here on the euro. Okay. They were very long, now they're becoming short. But there's no like major profit taking going on. If you take a look at the positions here, they're strong here, they're strong here. So, and the descending structure is holding. So it's more about weakness on the euro than it is on the Kiwi. Right? This is more profit taking and push to the upside. So we should take that into consideration too when looking at the euro Kiwi. So shorts would be the bigger odds trade. And based on what's taking place in the higher time frames, we couldn't just short here, because how do you know that this is not what's taking place, is a move to here? We would know if this was held and then we start seeing momentum shifting on the lower time frame, then we could take a trade to the short side. Okay? Do you understand that logic? That is what we're going to do. Now we look at the pound and we see it doing a bunch of nothing. Look, all these days doing nothing. Inside demand moved up and now it's retesting. It looks like the pound is going to be getting weaker. Okay? And once again, taking a look at the report, what's written on the pound? Is there any real strong sign? Okay? Shorts were aggressive, profit taking. We see a little bit of a move to the upside, but that's about it. Look at the coloration of the cells, neutral. Any indication for us to make a move? Not really. Okay? So since it's not strong, would we want to take any longs on pound pairs? Not really, right? It looks like, if anything, it's going to get weaker. Now let's see if that stands true when we look at the pound pairs. We have this trend to the upside holding, a weekly area of demand holding. If this weekly area of demand gets taken out, then we can have shorts. Okay? But as long as that demand holds, we have to respect that the force is to the upside. If price came down here and we start seeing a big momentum shift to the downside, then you could take shorts. Okay? But yeah, there's that trend line on the monthly. We've got to be very careful with that. Okay? Here's that trend line there. At least let's wait for that weekly area of demand to be taken out. And then it'll form new areas of supply, and then we can short. Okay? If the pound continues to get weaker, and more so if we see the COT report data suggesting that there's a bigger push for a move to the downside. Then we look at the pound CAD. Do we see anything special here? Not really. We're in a range. I've been pointing this out for some time here. We are stuck between a weekly area of supply and a weekly area of demand. So we need one of these two to be taken out. If this gets taken out, then we can go long. If this gets taken out, then we can re-examine and see what we should be doing. Pound yen. So this was an area where I was interested in going long, but it removed this opposing zone, which made things a little bit more tricky, and I said that we'd have to wait for a momentum shift to take place here, and so far that has not taken place. So we wait. Wait patiently. And now we go to the pound Kiwi. So you can see a theme here, right? You can see a theme here. Potential for a drop. This ranging, so we don't see anything yet. This zone taken out and not used to push price up, and this not really showing any momentum building to the upside. Potential taken out. No trend holding here, so it can drop easily. This is already tested, so the fact that it's coming back for a retest can prove a bigger move to the downside. Pound Kiwi. Weak. Dropping into that trend line. Already a momentum shift on the weekly chart. This supply could be used to facilitate a bigger move. That means a weaker pound and a stronger dollar, or Kiwi, sorry. What have we been saying about the Kiwi? It's been rallying up because of profit taking. So is that rally up because the institutions are accumulating a massive long position? No. It's rallying up because they're profit taking. So any strength in the Kiwi will be short-lived. All right? So if we take a short, we have to be careful and take profits soon, because any strength in the Kiwi will be short-lived. Any weakness on the pound can also be short-lived. But we're seeing a picture being painted here of a weaker pound, right? We looked at the pound US dollar. It looks weak. It's acting weak. And we look at the other pairs, and we can see some signs of pound weakness coming in the future. So keep that in mind. US CAD. Now we have this area of supply here. Underside of this trend line. We still have monthly supply here. So a bunch of nothing. Hard to tell what's going to take place here. A demand zone got hit up. Demand zone got hit up. So very hard to determine what's going to take place, right? So let's take a look at the US CAD analysis based on the institutional positions. Okay, let's take a look. What does it say? What do we see? Cooled off, neutral, cooled off. No sign whatsoever. Okay? Net positions 2,000. I mean, this is nothing. So no strong indication here. The technicals are not showing anything strong, and the data is not showing anything strong. So therefore, we can't really rely on anything when it comes to the CAD. US dollar yen. I believe it's profit taking that's in play, and we can go over to the US yen. There you go, profit taking on longs. We see the initial profit taking place here. Shorts are cooled off, and aggressive becoming less aggressive. So profit taking would suggest a move to the downside. Once this structure is taken out, it'll be a lot more probable that we get that drop. Okay, Kiwi, profit taking causing them push up. We got this weekly area of supply coming into contact, and now we see a momentum shift on the 4-hour, and we see the weakness starting to come in. All right, we have a daily area of demand here. So this is similar to the Aussie in that we can't just take a trade here long with a stop loss here. Okay, even though we have this ascending structure, opposing zones are being taken out, weekly areas being taken out, we have a weekly area of supply in control. So the weekly force is to the downside. We have to respect that. But because there's a massive move to the upside, we could look one time frame lower, like a daily, which was responsible for removing a weekly supply zone, which is even stronger than just a regular daily demand zone. And we can make an assumption that this will most likely hold, but we can't take a trade off of an assumption. What I'd like to see is, here's that area here. Here's that area here. What I'd like to see is a drop, and then I want to see opposing zones created by the institutions to be removed, just like on the Aussie, creating new demand zones to take a trade to the upside. That would be a good trade signal. Until that takes place, everything is too risky. Okay? Now, last but not least, if I remember correctly, there is some profit taking on the Kiwi. Let's take a look. It's all the way up here. Profit taking on longs taking place. Cooled off. Now slowly becoming a little bit long as price was moving upwards. And shorts are pretty much cooled off. A little bit of a tinge of bullishness, but basically profit taking. All right. Can it hold the structure to the upside? That's possible. We see the structure already broken on the daily, and we see that we have demand here. So it's likely that we see a bigger drop, especially with it being tested coming up. If this zone holds, it is more likely than not going to drop price. Down here is where I'm interested in getting in long. Okay? Why? Because the monthly trend is up, monthly structure is up, very tested area of supply here, 1, 2, now the third time, and weekly trend is up, daily is broken, so the only ascending structure still in place is the weekly. So a drop here down to here with this nested area of demand right here, this is the trade signal to go long like that, but we need price to do that first. So I'm waiting and watching to see if that is going to take place. Alright, this was a long video, but I wanted to go through all those things with you because they were essential for you to understand so that you have a good idea of what it is that we're looking for when we're trying to determine where the trade signals are for us to take with high probability. Alright, that's your Forex Market Outlook video for today. If you have any questions, shoot me a message, a private message in the Telegram or Twitter, or send me an email to whiteoakcapital@outlook.com. Thank you very much, and we'll see you next time. Take care.